So you clicked on the right video. It wasn't some YouTube clickbait. I actually bought Nvidia stock. I've had Nvidia stock on my list of top stocks to buy for a long time now, and I've been waiting for the right opportunity to add Nvidia stock to my portfolio. And I got that opportunity during this stock market sell-off as a result of the tariffs announced by President Donald Trump. I've already felt that Nvidia stock had been undervalued, and the sell-off as a result of the tariffs created a decrease in the price that allowed a better entry point for me, as well as better timing for me. There was one other stock I wanted to buy before I bought Nvidia, and you probably saw a couple of weeks ago, I had bought Uber stock. So with Uber stock in my portfolio, I went on to one of my other top stocks, which is Nvidia, and I added Nvidia to my portfolio as well. So I'm going to discuss a little bit more on why I added Nvidia stock, how I feel about the tariffs and how it's going to impact Nvidia both in the short term and in the long term, and share with you a couple of valuation metrics I utilized in coming to my decision on Nvidia stock.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So first of all, looking at Nvidia's forward price to earnings estimate, it's trading at a forward PE of 16.5, which is near the cheapest this stock has traded for according to this metric, going all the way back to 2022. So according to this metric, it's near the lowest levels. And then, of course, I calculate my own proprietary discounted cash flow valuations for the businesses that I'm following. And for Nvidia, the intrinsic value per share, which, by the way, I updated right before I recorded this video, I have the calculation at $120 a share. The current market price is $94 a share. So looking at this, I see Nvidia stock as being undervalued in terms of the intrinsic value per share. And then that's even after applying a weighted average cost of capital for Nvidia stock at 14%. So just to clear things up about how I think about valuation, if Nvidia stock, if I had calculated an intrinsic value per share of $94, that doesn't mean that I calculate Nvidia stock will be flat all year. If I calculate an intrinsic value for Nvidia stock at $94, then that means I think Nvidia stock is going to return its weighted average cost of capital for 1 year. So that means 14%. So if I calculated $94, that means this year I expect Nvidia stock to go up by 14%. Okay? So when I'm calculating an intrinsic value of $119 or $120, what I'm expecting is at least the 14% rate of return plus the conversion between the current market price and the intrinsic value per share. Maybe not all of that, maybe a little bit more of that. That remains to be seen, but some conversion there. So you look at that, that's about a 25% difference between current market price and intrinsic value per share. So for the next year, there's a considerable opportunity for Nvidia stock, and that's just for next year. And then longer term, Nvidia's prospects, in my opinion, are excellent. It's operating in one of the fastest growing industries in that of the data centers optimized for AI. And that segment is forecast to grow by several trillion dollars between now and 2035. I don't think tariffs are going to change that forecast by all that much. I think in the near term, there may be some changes to spending plans that might get pushed out by 1 year or maybe by a few months. But as businesses adjust to the new normal, they will still need artificial intelligence because artificial intelligence enhances what they can offer their customers, and it also lowers the cost of what they can offer their customers. Every employee becomes more productive. A business can do more with AI with the existing number of people, or they can lower their cost and do the same with fewer people. And this cost saving is going to be even more important now if businesses have to pay higher costs to import their goods. And many companies in the United States are importing from countries that were listed in the tariffs. Now, directly speaking, Nvidia imports not just from Taiwan with the Taiwan Semiconductor Manufacturing Relationship, but Nvidia is also importing other products that's needed for its full offering in the data centers optimized for AI. Nvidia is more than just a GPU. It has the networking equipment. It has the CPU, the whole Grace Blackwell technology. If they need to pay tariffs of 30%, 40%, 50%, that's going to increase their cost of goods sold. The good news for Nvidia stock investors is that in the most recent update, Nvidia's gross profit margin was 70%, 70, one of the highest I've ever seen of any company selling physical products. So there's room to absorb a higher cost. Also, Taiwan Semiconductor, which Nvidia buys from, has a large profit margin too. So Nvidia can negotiate with Taiwan Semiconductor and say, why don't you absorb some of these tariffs? We'll absorb some of these tariffs, and the rest we can pass along to customers and ask for higher prices, which, by the way, Nvidia was almost sold out for the rest of this year for its latest generation technology. So it's proven that it has pricing power. It's a dominant player in the industry. It has almost 90% market share. Second place is way behind. So Nvidia can go to customers and ask for higher prices. Some of that will lead to lower demand, but that's okay because they're sold out for this technology. Now, that isn't to say that risks are not elevated. Risks are now a lot more elevated for Nvidia stock than they were before the tariffs were announced. So now we have a couple risk factors working together with Nvidia. You've got the risk coming out that they're large buyers of their technology, which are Alphabet, Amazon, and Microsoft, that they could cut their spending. And this is a big reason why they would cut spending, is some major disruption like we saw with the tariffs. So the risks are elevated now for Nvidia stock. But that's okay. I have always thought that there are these risks involved with Nvidia stock, but they weren't priced in yet completely because of all of the enthusiasm surrounding Nvidia's prospects. But throughout the course of this year, more and more of the risks have been priced into Nvidia stock, especially after the DeepSeek announcement. And then we've had further moments and further information, data points that have brought down Nvidia stock. It's now down meaningfully in 2025. So a good amount of the risks are now priced in my opinion. Sure, the stock can go down more than where it is, and I'm okay with that. If the stock moves down further and all else remains the same, I may add another allocation to Nvidia stock at these current prices. If everything else remains the same, meaning there is no major retaliation from other trading partners, which then creates a further retaliation from the United States, and there's an escalating trade war, which causes even more damage, then I'll reevaluate the situation. But as it stands on Friday, April 4th, 2025, I like Nvidia stock at these prices, fully accepting that the risks are higher today than they were on Tuesday before the tariffs were in place. But I like the stock even better now with the much lower price and the higher risk. the business overall, competitively speaking, around the landscape is well positioned to handle these higher cost of goods sold, directly speaking. Okay. The indirect impacts, in my opinion, are the bigger risk for Nvidia, meaning not just what Nvidia has to pay, in terms of importing, which, by the way, semiconductors were excluded from the tariff announcement, but I'm still considering that on the table as something that could be included. Like right now, as I'm speaking, there might be an announcement saying, you know what, I changed my mind. I'm adding semiconductors back to the list of things that are going to be taxed coming in. So I'm not completely taking into account that semiconductors are going to be left alone. I'm still thinking that there's a probability they may be included, and I'm okay accepting that risk as well. But the indirect impacts is what could be the worst for Nvidia, because the buyers of its products, Amazon, Microsoft, and Alphabet, if they start to notice big declines in their business from their customer activity, and then they start to pull back meaningfully on their purchases, that's a bigger risk for Nvidia than the direct impact of paying the higher cost of goods sold here. So I'm watching those two things with Nvidia, monitoring it closely. And I didn't make my full allocation to Nvidia stock. Usually what I do is there's an amount that I would like to own at the current price. And so I'll start off with an allocation. And if the price remains the same and the risks remain the same, let's say 1 month later or a couple of weeks later, if there's more data, I'll make another allocation, and then maybe a month later, another allocation, and on for, several months if the price remains relatively where it is compared to the value that I see. If the stock price pops and starts to soar up really, really high, then I might just have my initial allocation, and I'm okay with that. I won't go chasing the stock much higher. I'll keep an eye on the market price versus the intrinsic value, how the risks have changed, if there's any other data points that justify the higher price, or profits looking better than I initially thought. And so I'll change my decision if there's a change in the data, if there's a change in the valuation perspective. So I bought Nvidia stock. I like it at current prices. If the price stays where it is a month from now and the risk situation hasn't changed, I might add more a month from now or 2 months from now. I haven't made that decision just yet. But as it is now, I like where Nvidia stands, and I made a purchase. Hey everyone, we've got some exciting news to announce. We launched a private Discord exclusively for our channel members at the VIP Discord tier. It's your backstage pass to ask questions, share insights, and get direct access to me. Don't miss your chance. Limited spots available, so join now.